What's up everyone, it's Karthik with MoneyVest. Welcome on board for our Market Open live stream. Hope you all are doing great. And Tesla, Meta, Microsoft, all these companies reported earnings yesterday. They're all moving in different directions as Meta is up over 9%, trading up to $730 per share right now. Tesla, on the other hand, it is up over 1.7%. And Microsoft is the one that is actually moving in the opposite direction, selling off a little bit over 6.6%, trading down to $449 per share. So hope you all are doing great. If the audio and the video is good, just give me a thumbs up. Just want to make sure there are no technical issues and we are good to go. So perfect. Hello from Malta. Thank you so much for joining. Is now stock at a good price to enter? We'll take a look at that here in just a minute. Good morning, Money Investors. Sandeep says, good morning from Bahamas. Hope you all are enjoying your time in all these amazing places. And yeah, hope you all are ready. Perfect. That's great. Bitcoin trading just a little bit under $88,000. We got Ethereum trading at just over 2,900 right now. Volatility is getting up to over 16.6, so just over 1.9% higher on the day so far. But we do have, of course, like I said, stocks moving in very opposite directions. Meta's moving up, so I've got a big challenge today is to roll my Meta call from $645 to well over $900 or $1,000. I'll see what those premiums look like for end of this year. And the best part is that I'm rolling from 2 days to 200 days. So going substantially out in terms of expiration, very similar to what I've done with Tesla. Palantir, I've got the $410 call for Palantir. I've got the $909 call for Tesla. For Meta, I'm going to be looking at well over $1,100, $1,200 calls and see what those premiums look like once the market opens here. So that's what we're going to be focusing on with my Meta option, of course, and would be a good time for a bull put spread on Meta. So it is already pushing higher, quite aggressively. So if you are looking at a credit spread, certainly today is one of those days where if you are going to be, let's say, buying a call and selling a call at the same time and collecting some net credit, that is going to be a bullish position, right? So, but if you are looking at a put spread, and you are selling a put and buying a put at the same time, you're not going to be getting a lot of a premium, right? Net credit is going to be quite low because nobody's buying puts today, or at least not a lot of people are going to be focusing on puts because Meta's up so much. I think it's going to be very call tilted trade for Meta today, considering how much it's pushing higher, up over 9%. So good morning. I wonder why Microsoft is selling off. Please share stat once you roll Meta on the Discord. Yes, absolutely. I will do that. And as gone over my previous videos, so far I've collected $4,000 in premiums, but then I collected another $965 in premiums. So let me just run through the spreadsheet very quickly, just so everybody understands. Prior to this last one, I was able to collect $4,000 in credits. Then I received another credit for $965, I think, was the total from the last recent call. So this is the total amount I have received for the premium. Now, depending on where this option is trading, it's going to be most likely, last time I checked, it was, I think, over $70 or $80 roughly. But we'll see where it ends up trading once the market opens at 645 call. It was trading at around $33. I'm assuming it's going to be more than double. I think close to $65, $70. So that's going to be my debit, right? So my debit is going to be, let's say, negative $7,000. And then the next step, which simultaneously what I'm going to do is, of course, sell a brand new call for, let's say, later this year, right? So if I'm looking at November or December, very similar to the Tesla and Palantir trades, if I go up to 323 days from now, December 18th, and I go all the way down, right? I go down to, let's say, $900 or $1,000. I want this number to be higher than this number, which is, let's say, negative 70, right? So if this is 70, I want the covered call credit for any of these $900 or $1,000 to be above $70. That's how I'm going to be able to collect that net credit for this simultaneous roll. And I'm also going to be moving up my strike substantially from $645 to well over $900. So that's another $300 of potential profit per share. Some of it is going to be recognized. Some of it is going to be, obviously, Meta's not there yet. So that's going to be the idea behind this. But I'll update everybody on the Discord with what I plan on doing with Meta here. As I mentioned in yesterday's market update, that the plan is either to, if shares drop, then to close them for profit. If it rallies, then just roll them for some net credit. Go roll those shares. Don't let those shares go. So yeah, I mean, that's the plan, because I'm going to do exactly the same thing as I did with Palantir and Tesla. Tesla's got 990 calls, and then Palantir have got 410 calls for, again, December 2026 for this year. So miss you. Followed you at time of in-mode analysis. Looking back, I should have stayed, but it's never too late. Welcome on board again. So happy to have you again here. And let's see. Good morning, everybody. Now drop on earnings, hitting CRM, Team, Path, Adobe, and Intuit. NVIDIA 2.0 in the making here. It does seem like it is. It does seem like it's going to be, as I'm going to be rolling a lot for Meta, and of course I've been doing that for NVIDIA as well, which has worked out really well. I mean, I've collected a lot of premiums, and you know, it's really important to have this very specific options trading portfolio as well, because you're able to capitalize on even sideways action, right? So there's a lot of stocks that have not really done anything in over a year. They haven't gone anywhere, but we've been able to collect premiums and reinvest it into more shares to buy more. Like, for example, Palantir, it's at the same level as it was back in July 2025, so it's essentially flat. And then, of course, Meta also in the last 1 year has not gone anywhere. So we are quite literally at the same price as we were back in February of 2025. Then, of course, we sold off, pushed up, sold off again, pushed higher, sold off, and now we're pushing up again. So in the last 1 year, it hasn't gone anywhere, but we've been able to collect some pretty decent premiums. Same thing with Tesla, same thing with NVIDIA. A lot of these companies that have rallied a lot, then they now start to stabilize sideways to consolidate within that range. So yes, NVIDIA is still consolidating, Sandeep. And there's a lot of companies, including Microsoft, which has not really done much in a long time. I mean, since August of last year, you could argue since May of last year, Microsoft is practically at the same price. So that's why, you know, if you're able to take advantage of this volatility, you're able to collect all these premiums, you can reinvest it and, of course, pick up more shares. So, Milan, what we did with NVIDIA has made me life-changing money, and for so many. That's incredible. That's amazing. So glad to hear that. And Meta also, you know, we had our shopping list. So if you come back to the shopping list, this is why it's so important, you know, for us to kind of be disciplined, be more patient, because if you look at Meta's light buy, where was it? It was at $590, right? That was a light buy over here. The heavy buy, which was a second buy target, was at $550. And one of them got hit, right? So this one obviously got hit not too long ago. So this $590 level, we were able to see that for Meta back in November of last year. So this was November 2025. As you can see, perfect validation here at that support of 588. And then once again, very close to coming down to 600. And since then, boom, just pushing right back up. So shopping list buy targets, in my opinion, very, very important, at least for me, because they give us a very clear idea on where the valuation is very conservative, where the numbers make most sense. This is a combination of, like I said, technical analysis as well as fundamental analysis put together, a little bit of a holistic approach to looking at stocks and the markets as well. So, Dave, I was reading your comment and then you deleted it. So whatever edits you want to make, you can post that again. I'll definitely read it. How do you see Apple earnings? Let's just go over to some stocks first that you guys have been asking about. Then we'll come back to some Q&As. But let's take a look at ServiceNow, which is dropping on earnings here. And then we'll take a look at some other names like Adobe and Intuit as well. But let's take a look at ServiceNow, which we talked about yesterday. Down another 8.6%, $118 per share on a couple of beats for the company coming in. $2.4 billion to boost its AI capabilities along with other strategic investments. And it is certainly looking like a bit of a falling knife at this point because it has sold off quite a bit in the last few months here. So declined after company's organic growth guide disappointed investors, and the cloud-based software company's guidance for about 21% subscription revenue growth this year came in better than expected, but its implied organic growth of about 19% was likely below what investors were looking for. And the forecast comes amid worries over ServiceNow's recent streak of big acquisitions, including plans to buy cybersecurity startup Armis for $7.75 billion in its biggest deal to date. And the move has triggered concerns over whether ServiceNow's organic growth is showing signs of slower acceleration and moves areas towards core business, and whether the acquisition activity will continue. So it's a classic case of a company kind of battling through organic growth and trying to fill that void with acquisitions and burning through a lot of cash. But at the same time, I mean, they've got a pretty strong balance sheet. As we discussed yesterday, $3.88, almost $4 billion of more cash than debt on the balance sheet. Valuation has come down on a forward basis, even now more so than we discussed yesterday. So 416 is 2026 earnings, and we're looking at about $119. So 119 divided by 416, we're looking at 28 times earnings now for ServiceNow. So yeah, I mean, this is one of those companies that is just been on a very, very slippery slope. Month after month, week after week, just been very oversold now, technically, and also trading down to a support, which again, this previous resistance potentially could be acting as an area of support now for ServiceNow. But at the same time, market sentiment does not seem very favorable or promising right now for this stock just yet. Are you changing those buy targets for Meta after their earnings report? Yes. So I'm going to update this right after the earnings season ends. So earnings season is going to end, I think, a couple weeks from now, at least for the major companies. So expect in the second week of February for this earnings season for a lot of the companies that we at least are interested in, for them to be completely reported. And then the shopping list will get updated with brand new buy targets and fair values updated to reflect the actual earnings from these companies. I've already started the process. I've already started to underwrite Tesla and Microsoft and Meta again. And then we will be looking at all these other companies as they are reporting. ASML has been part of the shopping list for a really long time. Definitely needs to be updated now, given that it's now more than double from those levels. So we'll be talking about that as well. I bought at 590, but I doubt we'll see those levels anytime soon. Those numbers they reported were beastly. Yes, I think 590 is now long gone for Meta. But as we always mention, as we always put in our shopping list videos and disclaimers and everything, never say never. Never say never, because just because something seems a bit unlikely today may not be that unlikely tomorrow. We've seen this happen over and over and over again. Every time I do release my shopping list prices, the first and the most important comment I get is these prices are too far away. They will never get hit. They will never be reached. We will never see these prices. And time again, in the next correction or the next dip or the next volatility spike or the next crises that happens in the market, well, long behold, what do we see? We see those prices. And so that's why it is important for us to be prepared, be patient, be disciplined. So this list is a list of, for what I believe, a list of high quality stocks, and we just need to nail down the high quality prices. As I mentioned in my yesterday's video, our job as investors is to get great assets at great prices. That's what we want to do. We want to get great stocks at great prices. There's a lot of stocks out there that are great, but obviously they're trading at very expensive valuations. And so if you're getting a great stock but at the wrong price, you still might not come out ahead. And if you're not getting a great stock but at a great price, that might also not work either. So our job is to get both great stocks at great prices, and that's what this list is all about. So Valmsy says gold, still pleasantly wondering on it to exit partially and roll to equities to gold bars. I got 5 years ago, appreciated 300%, probably 10 to 20% of my portfolio wealth preserve with grow. Yeah, I think gold and silver have gone crazy, right? I mean, I've just been updating this on my spreadsheet as well. I'm up 300% as well on both gold and silver holdings, although I don't have like a ton. My precious metals and commodity portfolio is only like $20,000 now. And I've only really invested like $5,000. So it's done really well. But yeah, the plan is to grow this portfolio, add to it a little bit more over time, continue to accumulate more gold and more silver. As I mentioned in my yesterday's live stream, I think there's going to be, as we move more towards electric vehicles and move more towards solar panels, robotics, artificial intelligence, data centers, I think there's going to be more demand, more need for silver and gold as well. So that industrial demand as well as capital preservation, the safe haven asset, a bit more tangible asset. Central banks are stockpiling as well. So I think there's going to be substantial demand for these commodities longer term. So for me, I'm not selling, I'm not exiting, I'm keeping what I have. And the plan is to add more or on any kind of dips and pullbacks we can get. But from the looks of it, it doesn't seem like this wants to stop. Silver also hitting a brand new all-time high at about $120 per ounce. Like, what is going on with the commodities, with the precious metals here? The monthly chart for silver looks just insane. Like 5 months, not even 5 months, since May 2025, April 2025. So about 8 months, 9 months. This was the best trade in the last year. Copper is warming up nicely as well. That's good to see. SoFi stock at this price. What's your thoughts on it now? So for SoFi, we are seeing a nice validation at the support of $25, $24. So, this is the range. And once again, if you go back to SoFi from August of 2025, the stock hasn't done much. And we're back under $25. So this is going to be that area of support to watch for SoFi. Seems like it's getting a nice little bounce back higher from these levels, and resistance all the way up to $30 for SoFi, all the way up to $32, $33 for the stock. So a lot of consolidation sideways, but that's going to be that support at $24. If we do break down below this level for whatever reason, the next target is going to be $20 for SoFi. And of course, earnings are coming up this Friday, 11 cents, 11.5 cents, with just under $1 billion in revenue expected from SoFi. So RCL, let's take a look at this company as well. Royal Caribbean Cruises. I know, Mike, you love your cruises. But this right here is the entire uptrend. It's done really well. I mean, since 2022, of course, it was kind of a trade that was written off during COVID, but then since then, things have improved substantially. It's up almost 1,000%, 10x from its 2022 levels, and it's been on this very nice, consistent uptrend. So if you are looking at a dip buying opportunity here, so this is the entire chart within which it's been trading. We got a resistance all the way up here at 367 for RCL, and a support level that's going to stay put right there at 250s. So that's the technicals. Support 350s, resistance all the way up to 360s. Support 250s and resistance up to 360s for RCL. Do you think it's an opportunity to buy Microsoft stock because it is down? Microsoft, we've got a light buy at $402 with a fair value of $355. So $402, and right now Microsoft is trading down to 440s again. I believe that it could be a good starting point or a DCA level if you already have the shares. As I mentioned in my previous videos, that these are levels where my target is to bring my costs down to. These are not levels specifically that, okay, you need to wait for these levels to get hit in order to buy them. But instead, this is where I want my cost basis to be. Now, if you are, let's say, starting a brand new position, then both of these things can be true, right? Because if you want your cost to be $402, then $402 becomes your light buy. If you want your cost basis to be closer to 380s, then 380s becomes your heavy buy. But if you already have shares and you're looking at, let's say, dollar cost averaging, then you can use these as reference points that, okay, I want to move my basis down or up to these levels comfortably. And even if you want to pick it up at a 15-20% correction from all-time highs, that's okay. So that's why I mentioned, like, these are not like, set in stone fixed values. These are reference points to where ideally I would want my cost basis to be sitting at. So if I already got Microsoft, let's say from like 300s, and we're getting a nice 15% drop from all-time highs after earnings, it's down to their 6.5%, maybe I can move it up and get us close to like $402 or $382, and that's okay. So we don't have to wait all the time for those prices. So support level for Microsoft at 445. If you do get a breakdown further in the coming days or weeks, next support down to low 400s. And this, I think, in my opinion, is going to be a much better area for DCA for Microsoft. So this is going to be that level to keep in mind right there. Okay, it's under its offering price, $27.50. Which one are we talking about over there? What are your light and heavy buy for Uber and your thoughts on the overall company? Uber, please. Let's take a look together. I think I've done a video on Uber before. Let me just see if I can pull it up very quickly. I also want to reference back to my previous videos. I always want to do that. So, you know, if you find any stock analysis, we can always come back to it and do an update because it's important. I like going back to my old analysis and see how it worked out and what is the actual win rate and how good am I in my analysis and picking out stocks. So I like doing that. So I always try to find if I've done analysis on that company and that stock in the past so I can learn from it, fix my mistakes, and keep growing as an investor, because that's really what it is, right? Nobody's perfect. Everybody's going to make mistakes during their investing journey. Doesn't seem like I can find my video. Let's see. Yeah, I'll have to dig a little bit deeper because I know I have done video on Uber, but can't seem to find it. Maybe it was a few years ago. But nonetheless, I mean, Uber as a company, I think has a strong long-term value proposition, but I do at the same time feel that full self-driving, you know, once Tesla's fleet is activated with full self-driving, autonomous driving, I think can start to create a little bit of problem for Uber. But at the moment, I think this is a company that has done incredibly well in terms of growing revenues, becoming more profitable. And if you look at the valuation right now, 10 times earnings, a little bit over 3.5 times sales. So earnings for 2026 at $349, and the stock right now is trading at $80. So 80 divided by 349, we're looking at around 22, 23 times earnings. Now, the worst part about this and the reason why it's actually selling off is because future expectations are for an earnings decline. When? In what scenario? This is a very, very simple quiz question. In what scenario is the trailing PE multiple higher than the forward PE multiple? Whoever gets this question right will get a cookie. So in what scenario do you think, this simple trivia question, if your trailing last 12 months price to earnings is higher multiple versus your forward next 12-month earnings, what does that mean? What does it actually represent for that company, for that stock? Because that is what we're seeing for Uber. On a trailing basis, they've got a lower, they've got a lower PE multiple, and on a forward basis, they've got a higher PE multiple. That's what I meant, by the way, if I confused anybody. So if on a trailing basis you've got a lower PE multiple and on a forward basis you've got a higher PE multiple, what does that represent for that stock? Temov says losing market share. Yes, I mean that could be part of it as to why that is happening. But what is the main component that is actually concerning? What's getting priced into that stock for the next 12 months? Let's see who can get that right. Compressing margins. Well, so again, it can be due to compressing margins as well. But the biggest reason why that's happening is because of lower earnings, right? The bottom line, the earnings is going down. Because what happens is if earnings compress on a year-over-year basis, then the PE multiple is higher on a forward basis versus the previous year. So to give you a very simple example and illustrate this, let's say 2025 and 2026 over here, price, let's say for Uber is around $80. 2025 earnings, $5. 2026 earnings, let's say it's $3. So what happens to the price to earnings? Price to earnings for 2025 is 16 and price to earnings for 2026 is 26. So instead of going down for price to earnings multiple, because usually what happens is when you're looking at a forward earnings is usually, if a company is growing, is lower than the last 12 months worth of earnings, right? So forward is always lower multiple wise compared to the trailing 12 months. But in Uber's case, it's the exact opposite, right? The reason being is because their earnings are expected to go down from like $5 down to $3 in some sense for 2026. As a result, even though on a trailing basis, you might think, oh, the company is trading at a 16 or a 10 times earnings, on a forward basis is actually trading at a much higher multiple. And markets are nothing but a forward-looking machine, always looking at the next few quarters, next few years of earnings. And as a result, it's already getting priced into the stock. So right now we've got a support at $80. If it does break down, I think $61 is going to be a potentially heavy buy for Uber. So that's going to be that level right there for us to watch. And at $60, it's going to come down to 20 times earnings, which I think is a lot more reasonable. But if there is earnings decline, things start to become a bit more concerning because as other members pointed out, it could be for multiple different reasons. It could be due to market share loss. This could be due to compression of margin, losing their moat, a lot of different reasons. So yesterday we talked about potential swing trade with Visa. Have you thought about it further? So Visa and MasterCard, both I like here at these levels at $320, $317, $318. However, I think a much better entry would be closer to $301. Reason being is because there is a potential bear flag that could break us down further. This is just from a technical perspective. But fundamentally speaking, I think Visa is come down to some pretty attractive levels, but it's also a slow mover. It's not going to be moving very fast. The beta is less than 1, so it's actually less volatile than the S&P 500. So you can see that it's 0.87, so it's 13% less volatile than the S&P 500. And it is also, like I said, a little bit of a consolidated pattern here, so it's just been range bound. So if this is something that you're looking at, okay, long term, I want to accumulate Visa. Visa is a very strong company, one of the strongest payment networks in the world, very high margins, and it's already down from its all-time highs. So all-time highs sit at well over 374. It's trading down to 330. It's down 11% in a correction. It's a good starting point. And those next subsequent levels to add to are going to be 317, 300, down to as low as 290. But from a swing trade perspective, you really do want the stock to move. And Visa does have low beta. As long as we're patient, then I think it can be a good lucrative swing trade. But as I said, from a technical perspective, it also seems a little bit more of a potential bear flag. If it breaks down further, low 300s would be the best entry there for Visa. So STX, and that's putting a lot of faith on autonomous vehicles. I mean, Tesla reported earnings, right? And I still have to go over them in one of my videos, so planning on working on that as well. But yes, the vehicle sales were concerning. We did see a decline in overall sales, which we knew they were going to come in with a lower or on par vehicle sales, and of course revenue coming in with a decline for the first time ever. But I do still believe, I think that is the future. Autonomous vehicles, robotics, FSD, like this is where the world is headed. It is a piece of technology which is many years into the future. It's not very readily available, and it's not something that Tesla is going to materialize on very quickly, but the entire valuation's built on the tech side of things, which is autonomous vehicles, FSD, and robotics. So if that is not the future, then Tesla, in my opinion, doesn't deserve this valuation. I've been very clear about this before, that if you purely look at it from an EV perspective, obviously Tesla's $1.4, $1.5 trillion market cap looks ridiculous, but there's a big premium getting tagged onto that price tag because of what Tesla is capable of doing in terms of their execution in full self-driving, autonomous driving, robotics, AI, energy, everything. So market still believes. 1.1 million people are actually paying for FSD for the first time ever, which obviously is a huge deal, as Dave points out. Dave, by the way, what are you doing, man? Just go rest. Dave told me like he was extremely sick. He was not doing well today. I just told him to not do anything but just lay in bed. I don't know what you're doing here. You should be sleeping. But all right, so let's do some Q&A. Any other questions related to anything? Investing, finance, trading, options, macro, interest rates, inflation, stocks, commodities, crypto, bonds, everything. We will cover everything. Any questions? I'm happy to take them. Oh my God, what is that medicine? I can't even pronounce it. Acetaminophen. What is that? Or how do you say that? I can only there's too many syllables there. It's a 5-syllable word, dude. What are you taking? Tylenol. Okay. That makes more sense. All right, so oil rally. Crude oil has been moving, right? On all of this speculation over US and Iran. I mean, it's getting up to over $66 a barrel. Crazy parabolic run up right now for crude oil. As all these tensions continue. So US-Iran tensions, production outages in Kazakhstan, US production freeze-offs, and tightening US restrictions on purchases of Russian oil are contributing to recent oil price strength. The potential for Iran getting hit has escalated the geopolitical premium of oil prices by potentially $3 to $4 a barrel. And oil prices can stay more elevated than many had expected, despite the markets starting the year anticipating a large oversupply. So, yeah, I mean, this is breaking out of a very strong downtrend here as crude oil are up in 3 weeks in a row and getting up to over $66 a barrel. And next target all the way up to 77. So, okay. Thoughts on iron earnings? We'll take a look at that here as well. Next show to drop between Powell and Trump. I think we're going to have to wait and see whatever Trump doesn't say towards Jerome Powell. That's how you say it, Kevin. Okay, so acetaminophen. You had to put in meta in there, didn't you? Just kind of rub it in my face. Taking any opportunity you guys can get to put meta right there. I love it. Okay, so let's take a look at ACHR. How is the media in India society receiving the mother of all deals with the EU? I think they're taking it with the stride. I think overall it's a good positive development. But at the same time, so I was talking to a few different dealers in India for German cars, right? For BMW, Mercedes, and they mentioned that over 90% of the cars are not CBU units, so they're not completely built units. They're actually assembled within India, so all the parts come in and they're assembled in India. So most of those cars are not going to be affected by the reduction in tariffs, right? From 110 down to 10%. They are not going to be affected by it at all. Whatever the prices are, they're going to stay. They're not creating any kind of reduction in prices because they're all built within India. The small 5 to 10% of the vehicles that are the AMG models, they're the higher end luxury models that are being imported into India from the EU, completely built units, so CBU units, they are the ones that are going to get affected the most, and that's huge reductions in prices, but that is for a whole different segment, right? We're talking well over $100,000 to $250,000, $200,000 cars that are going to get that reduction in price, but most cars are going to just be unaffected by this because most German brands, European brands that are importing into India are importing parts and they're getting assembled within India because these brands have been around for a really long time. They've essentially built out their supply chains to make sure they can avoid that tariff in the first place. So even right now, there is no tariffs on those cars. So it's going to be targeted towards a very, very small portion of those CBU units. Okay, ACHR, Archer Aviation. I think we have discussed this in our previous live streams as well. As it continues to consolidate sideways in that range, we got a support at 660. So that right there is going to be that level to watch for Archer Aviation, with a resistance up to as much as 920 for this stock. So, do you plan to buy real estate in the US? Yes, I do. In fact, I was talking to Dave about this year. The plan is to pick up a property or two in the US. So the plan is indeed in the works. Does Uber competitive advantage on ride sharing data and regulatory other AV partnership help the company with the uncertainty? I think they do, but I also think the company that does have the hardware has a bigger leverage over the company that owns the software. Like for example, I've always believed that even though Meta's a better company than Apple has a much bigger leverage than Meta, because Meta does control the time spent, right? So all the social media apps, Instagram, Facebook, WhatsApp, whatnot. But the hardware, which is Apple's products, is way more important. So just like that, I think an autonomous vehicle and FSD, Tesla's the hardware, Uber could potentially be the software. So Uber needs a hardware partner, whereas Tesla's building software in-house. So Tesla will always, in my opinion, have a much bigger leverage long-term in this market if executed well. And Uber needs to pivot because their industry, their sector may not even be available, may not even survive what the next future of driving is looking like, which is autonomous vehicles, all the fleet of cars driving themselves around, acting as rideshare. And so they need to pivot hard, pivot quick to find their partner on who they can do this with. So, but that's just my view. I think, like I said, hardware has a much bigger leverage than software. I hear you. My Metu shares are getting called away too. He identified a really good deal, and I hope he locks it in. Yeah, I'm just in the middle of those negotiations now. So we'll see. We'll update you if it goes through, if it closes. So, but yeah, it's a new process. It's definitely a very, very new market to be dealing with. Come to Queen City, Charlotte. All I'm looking for is really good zip codes, by the way. Like I'm always researching, and since I'm investing out of state, I want to know like good zip codes that are undervalued zip codes in the US, all over the US. It doesn't matter, all 50 states. Like I'm always open to learning about those local markets. And if you guys have any suggestions, any recommendations, please do share. Because it's really important to kind of drive around the neighborhood, understand where those undervalued pockets are, safe neighborhoods, obviously coming up with good rents and good potential for appreciation, some hotspots. So would definitely appreciate any insights you can share. Okay, ServiceNow we covered earlier. Market's about to open in about a few minutes here as Meta continues to move up over 10% now, trading up to $736, still trading below the all-time high of just under the all-time high sits at well over $796. So we are almost at all-time highs again, at all close to $800. So that's where we are with Meta. Tesla dropping pre-market, but still up 1.3%. And Nvidia is essentially flat, with SMH trading at a brand new all-time high at just under $417 per share. So very, very strong move coming in for SMH. Beachfront property in Arizona. Come to Miami Beach. Yeah, I'm not looking to go crazy with this, guys. Meta drops here. It could be forming a head and shoulders pattern on the day chart. Let's take a look. So on the daily chart, a head and shoulders. I mean, it's hard to identify where the head and where the shoulder is. Where's the head? Where's the shoulder? Mark. No, not Mark. Akash. I don't see it. I mean, it was like going through. I mean, yeah, you could potentially argue that this was the head and then this was the right shoulder, but we didn't really have a left shoulder, right? Left shoulder was like pushing up and then selling right back down. This would not be the left shoulder. And certainly this cannot be the left shoulder, and this cannot be a small head. So I don't think that we're seeing, it's a W pattern. Yeah, so it's a little bit of a different pattern, not the head and shoulders for Meta. So cheapest cost of living is in the South. Yeah. That's why I've been looking at North Carolina a little bit. I've been looking at Florida as well, as per Dave's recommendation. And then North Carolina, I was always interested in that market because I did a lot of research and learned that a lot of people are moving, jobs are growing. And then also looking at the Sun Belt area, such as Texas, but then property taxes can be pretty high over there. You're either paying higher property taxes or you're paying higher insurance. You just have to pick your problems. Goldman Sachs or JPM. So we have a JPM on our shopping list. We do have JP Morgan as part of the watch list as well. So one of the best, financial stocks in my opinion. It's just been doing really well since October 2022. It's up like 245% since April of last year. The stock's up like over 60%. Plus all the dividends that we collect, right? Well, it says indicated dividends are zero. But $1.40, $1.40. I don't know why it says 0% there. Okay, a couple minutes left for markets to open. Crude oil is on the move, $66 a barrel. We got Ethereum trading at just a little bit over 2,900, but Bitcoin just under 88,000. Volatility is also on the move here, up over 4.4%, trading up to 17. I'm going to end the live stream here because I do have to place a very important trade, which is going to be the Meta trade. So I need to look at the options chain as soon as markets open. And we'll update everybody on the Discord. We'll see what happens with Meta throughout the day. Is there going to be any profit taking, or is this rally going to continue? Either way, I'll share the update on Discord. So thank you so much for joining, everyone. Really appreciate you all. Again, don't forget, we got a couple more days left, today, tomorrow, and the day after. If you want to take advantage of the 40% annual discount available for MoneyVest, access to Discord, the website, all the videos, everything is going to be available with the link that I'm putting in the chat now. And as always, happy investing. Hope you all have a fantastic trading day. We'll see you all in the next live.